Hello and welcome to Investment Insight, your clear take on the markets. Let's get started. Today we are doing a deep dive into some recent analysis that, frankly, covers two events that have just completely reshaped how global markets need to think about geopolitical risk.
Yeah, that's right. We're really moving beyond the old playbook of, simple trade wars or sanctions.
We're looking at military precedent on one hand and then these incredibly powerful regulatory controls on the other.
Exactly. We've got a high-stakes U.S. military operation in Latin America, and then China's Ministry of Commerce basically putting Japan in its crosshairs. And for you, the listener, our goal here is to unpack the reactions to these moves.
Right. And we need to get our heads around two really key concepts that are popping up everywhere in this research. The first is the precedent problem.
And the second is the threat of regulatory contagion. Honestly, if you're trying to anticipate future investment risk or supply chain pressures, you have to understand these ideas. They're essential now.
Okay, so let's start with the first one, the big precedent. This all revolves around that high-stakes action involving Venezuela.
Yeah. So under the Trump administration, the U.S. launched a military operation.
The public justification was that it was a response to narcotics and terror-linked crime.
Hmm.
And they were explicitly targeting a foreign leader for capture.
And the analysis we've seen, cited by Reuters, noted the U.S. kept up the pressure afterwards, even floating the idea of additional strikes.
So this was a very precise, very high-cost action, right, in what a lot of people would call the U.S.'s own backyard. How did the rest of the world, specifically China, see that move?
Well, what's really fascinating in the analysis is how Chinese commentary framed it. Across their social media, the phrase that kept coming up was a blueprint for action.
A blueprint.
Yeah, analysts saw this tendency to frame it as a template or maybe a powerful justification for China to take its own actions somewhere else.
A blueprint for what, though? How does that apply to China's core interests?
It really boils down to what some are calling the backyard logic. The argument that was all over Chinese online spaces was, well, pretty simple. If a superpower like the U.S. can conduct a high-risk military operation in its sphere of influence, Latin America, in this case,
Then China feels it has a justification to act in its own core interest area, like Taiwan.
exactly. The argument is that the U.S. just set a new standard for acting outside of, let's say, typical international norms, but within its own strategic zone.
That's a really critical distinction. But if the analysis also suggests they aren't planning to just, copy-paste the action for a full-scale invasion, why does the blueprint idea even matter to Beijing? Is it just talk?
That's the key nuance. It's less about an immediate change to a war timetable and more about giving them a pretext. It's justification they can point to.
So a rhetorical tool.
A very powerful one. The final decision on something like Taiwan still comes down to internal Chinese politics, their own military readiness, things like that.
Yeah.
This just gives them, let's call it propaganda leverage. It doesn't fundamentally change the operational risk on the ground.
Got it. The military variables are still way too high for a direct comparison. So let's flip it. Let's look at the U.S. and Taiwanese perspective. For them, this was probably seen as a signal of resolve. Right.
Precisely. The message the U.S. is sending is all about military superiority,
It proves they can carry out these precise operations anywhere in the world.
and that the administration is willing to accept the international blowback to do it. The fact that such a high-cost option was even on the table and then executed sends a very strong signal to any adversary.
But help me connect the dots for our listener. Why isn't the Venezuela case a direct model for something like Taiwan? I mean, we've seen the U.S. has the capacity for a precise strike.
The difference in complexity is just enormous. Think of
Yeah.
it like this. Venezuela was surgical, a scalpel.
Okay.
A conflict over Taiwan would be a full-scale war. It's not a single operation. You're talking about a potential long-term occupation, securing huge naval routes against a modern military, and you'd have guaranteed intervention from allies.
So it's a completely different scale.
Completely. Experts all agree that the real deterrent there is the long-term warfighting will, not just the ability to pull off one quick strike.
The economic fallout here is just as important as the military side, maybe even more immediate. And China has skin in the game.
Oh, absolutely. They aren't just an observer here. The sources are clear. China is Venezuela's single largest creditor. They're also a massive buyer of their oil.
So any threat to the current regime in Venezuela is a direct threat to China's bottom line.
And this is where you see the economic weaponization in action. There's active discussion in Washington about rerouting Venezuelan crude oil to U.S. refineries.
Away from China.
Away from China, which has been the main destination for that oil for years. If the U.S. controls sanctions and decides where Venezuela sells its oil, it hits China's energy security and its ability to negotiate prices.
And what about all the money China has already poured in?
That's the other shoe to drop. All those massive loans and investments in Venezuela's oil industry. They now face a huge risk of never being paid back, especially when you hear talk in the U.S. about rebuilding the Venezuelan oil industry.
Which really means U.S. companies coming in and restructuring everything.
Exactly, a total reshuffling of the deck. So the U.S. action wasn't just a military signal, it was a direct financial hit to China's foreign investments.
And the market saw it coming. Oil prices ticked up on the uncertainty, energy stocks were strong, gold rose.
Right.
The usual flight to safety.
Right.
But the wild part, the thing that sounds so counterintuitive, was what happened to Venezuelan bonds. Both government bonds and bonds from the state oil company, PDVSA, they soared. How does that happen?
That reaction tells you everything you need to know about what the market was betting on.
Regime change.
Not just regime change, but what comes after. The bet is on debt restructuring. Investors believe a new U.S.-friendly government would prioritize normalizing its finances and paying back its debts.
So those bonds that were basically worthless one day suddenly look like a golden ticket the next.
It's a pure bet on political realignment driving financial returns. A perfect example of geopolitics repricing assets overnight.
Which brings up this norms problem. The UN High Commissioner for Human Rights came out and warned this action set a dangerous precedent and damaged international law.
And for an investor, that's not just an abstract legal point, it matters a lot.
How so?
Well, if the unwritten rules against this sort of thing get weaker, it raises the chances of everyone starting to take these kinds of destructive actions. Think about mutual asset seizures, sudden capital controls between countries.
Global shipping insurance costs would go through the roof.
Exactly. The whole system gets riskier. When one major player tears a page out of the rulebook, it gives others permission to do the same with their own tools.
Which is a perfect segue to our second major event.
Right. China's move against Japan.
This one wasn't military, it was regulatory. And it was triggered by political tension. China's Ministry of Commerce, MOF2AO, announced these intense export controls on Japan right after some strong comments from Japan's Prime Minister, Takaichi Sanae, about Taiwan.
It's a direct line political statement, economic punishment, no ambiguity there.
And the ban itself is very specific, which is what makes it such a powerful weapon.
It's not a blanket ban on everything. It targets dual-use exports.
Meaning items that have both civilian and military uses?
Correct. The ban specifically hits exports going to military users for military purposes or, and this is the key part, for any final end use that could enhance Japan's military capabilities.
That last part sounds incredibly broad. If something is dual use and China gets to decide what enhances military capabilities, they could basically shut off huge parts of Japan's supply chain.
That's it, exactly. The real weapon here is the interpretation of end use. An official list of the 800 or so items isn't even fully public, but it doesn't need to be. The ambiguity is the point. It gives China the power to potentially block anything from rare earth elements to advanced computer chips.
It creates constant uncertainty for Japanese companies.
The total uncertainty. And that brings us to the most concerning part for anyone operating globally. This idea of regulatory contagion.
Right, because it's not just about China and Japan.
No, China made it explicit. They warned that any country, organization, or individual caught helping Japan get around these controls would face legal consequences.
So think about what that means. Let's say you're a logistics company in Germany.
Perfect example. You ship high-tech components all over the world. Suddenly, you have to worry that if you ship parts to a Japanese tech company, Beijing might decide you're in violation and cut you out of the massive Chinese market.
You're caught in the middle. It forces everyone, globally, to raise their compliance budgets and constantly assess this new political risk.
It's like a compliance net thrown over the entire global supply chain that touches Japan.
So what's been the actual impact on the ground? Have Japan's supply lines for critical things like rare earths just been severed?
So far, the data suggests it's more of a political warning shot than a full-scale cutoff.
Interesting.
Yeah, recent reports show that Chinese rare earth exports to Japan haven't actually plummeted. In some cases, they even went up slightly, maybe from companies stockpiling.
So the real damage isn't a supply shock, it's something else.
The real damage is the uncertainty premium. That's the term analysts are using. Japanese companies now have to deal with longer lead times for procurement, they have higher compliance costs to prove their end use is civilian, and their negotiating power is weaker because their supply chain is now politically fragile.
Okay, so we've laid out two huge precedents, a military one and a regulatory one. For you, the investor listening to this, the big question is what now? How do you even begin to model this new world?
Well, if we zoom out, this analysis really points to three big adjustments investors need to make, three new angles for looking at their portfolios.
Let's take them one by one. What's the first?
The first is energy flow revaluation. The Venezuela precedent isn't just a story about politics, it's a story about oil. It shows a real risk of crude oil bound for China being rerouted by sanctions.
So this is about more than just the price of oil going up or down.
Much more. Investors have to start modeling the long-term effects. Think about Asian refineries that depend on that specific type of crude. Think about rising tanker costs and insurance premiums for any ship moving through contested waters. The flow of energy is now a political weapon.
Okay, that makes sense. What's the second angle?
The second is the defense and security premium. The rivalry we're seeing and the fact that military action is clearly on the table supports a long-term premium on stocks in defense, surveillance, drones, and cybersecurity.
And this isn't just betting on a war breaking out tomorrow.
No, not at all. It's actually a bet on the protraction of the deterrence competition. It's about the sustained long-term spending. Every major power is now pouring money into signaling strength and resolve. That steady flow of capital is what supports valuations in the sector.
We're settling in for a long period of high tension.
Exactly. And the final angle is probably the biggest idea for long-term investors. The supply chain reclassification.
Reclassification.
Yes. China's move against Japan proves that at any moment, Beijing can just reclassify a normal industrial component as a national security item.
Which means the goal for companies can't just be finding the cheapest part anymore.
It can't be. The focus has to shift from simple cost minimization to active political risk hedging.
So what does that look like in practice?
It means capital expenditure is now flowing into building resilience. We're talking about concrete investments in dual sourcing, so you have a backup supplier. We're talking about friendshoring, moving production to allied countries, and we're seeing massive investment in non-Chinese alternatives for everything from rare earth magnets to semiconductors.
So security is now more important than efficiency.
For long-term capital, yes. This kind of hedging is becoming the #1 priority, because the political risk now outweighs the benefits of the most efficient, cheapest supply chain.
That is a critical takeaway. For you, the listener, I think the synthesis is this. Geopolitics isn't some abstract headline anymore. It's now written directly into energy contracts, into the price of government debt, and into the compliance budgets of global corporations.
Right, and understanding the precedent from the U.S. action and the regulatory power China is now using is it's essential to being well-informed today.
And I think the final provocative thought here is that we are really watching in real time as political risk management starts to actively override the traditional models of efficiency that have governed global investment for decades.
It's a fundamental shift. Capital is now actively looking for security, and it's willing to pay a much higher price to get it.
Don't forget to subscribe and hit that like button.